Today I will cover the story of Sam Bankman-Fried. I will let you listen to the stories and comments from people from varying perspectives. It is reported that the value of his company, FTX, collapsed in a matter of days and went from a value of $32 billion to zero. There are billions that cannot be accounted for. There was even $477 million of unauthorized withdrawals that were made after they filed for bankruptcy. Loose management, lack of accountability, youth, greed, and arrogance all combined to destroy the money of those who were some part of FTX and Sam Bankman-Fried. I'm Ben Reppond. Welcome to my YouTube broadcast. Today is November 22, 2022. I will cover the story of Sam Bankman-Fried, and I will play for you some interviews done on CNBC and Yahoo that were from people from different perspectives about what went on with him, with FTX, and what is the future of FTX. Akiko Fujita of Yahoo Finance interviews John Reed Stark, Duke University senior lecturer on Sam Bankman-Fried and FTX. He is very direct in what he says, and I think you'll find this interesting. He says in the interview, it is worse than Theranos and worse than Madoff. He calls it the Wild West. And at the center of the story is Sam Bankman-Fried. And he explains why he says that. Take a listen.
Well, let's continue the discussion with our panel here. John Reed Stark, he's with Duke University's Law School, and Neil Matra, he's former senior special counsel for digital assets and blockchain technology at the SEC. And gentlemen, good to have you both on. John, I'm going to start with you because I know you have been very critical about just the Wild West as you have described it in the crypto space. It's worth mentioning the numbers again here. I mean, we're talking about a $32 billion valuation earlier this year. They're now trying to cover a shortfall of $8 billion. How much of what's playing out right now is FTX specific? How much of this is a red flag for the space overall?
How can you even know? You know, you call it the Wild West. That's really an understatement, Akiko. It's Walking Dead like anarchy. There's no regulatory oversight, no consumer protections, no licensure, no insurance, no net capital, no transparency, no sunlight. We have no idea what's going on inside of these entities. And if SBF is actually using Alameda, which all of the allegations seem to be leading to, as his personal piggy bank for whatever he wants to use it for, this is very serious because you're not just talking about SEC violations. Right now, the Department of Justice is getting together. I was just at the FBI on Friday in a big meeting just relating to some general concerns about cyber and crypto. And these people are all mobilizing right now. Search warrants, arrests, all of those things are going to happen very quickly. The whistleblowers are mobilizing. The informants are mobilizing because they're seeking immunity. This is worse than Theranos. This is worse than Madoff, if what I'm reading is true. That's my opinion. Worse than Madoff? Yes, absolutely. Because in this case, you're dealing with all sorts of investors, all sorts of, look at these financial entities who have had to write down their entire investments. These are supposed to be some of the most sophisticated people around who conducted due diligence on these things. But due diligence in the world of crypto, it's like proving what a poltergeist is wearing. These kinds of things, you can't figure them out. Look at some of these companies, you don't even know where they're headquartered. You don't even know who works there. There's absolutely no transparency. And the contagion is quickly, rapidly spreading amongst all of the various crypto ecosystem. And that's a serious, serious problem for anybody who's doing anything with crypto. I'm sure the SEC will be sending teams of examiners to all of these regulated entities to find out exactly what their exposure is, if there is any. And the enforcement of it is probably standing down while the DOJ is doing their criminal investigation, which might involve informants and search warrants and arrests. And the SEC can't really interfere with that. And they don't want to get situations where you're taking testimony by two different governmental entities.
Next, I will play for you a clip. Also, CNBC, Brian Sullivan interviews Lee Reiners, also from Duke University, their financial markets center. And he comments about the future. He gets over into crypto and Bitcoin, but particularly he talks about Sam Bankman-Fried and FTX. Take a listen.
In the debate over regulating crypto, there seem to be two sides of the Bitcoin. And as many different ideas and proposals, people who claim to have the right plan. But something will change with crypto regulations. So let's find out what that is. Let's bring back in our friend, Anthony Scaramucci, as well as the policy director at the Duke Financial Economics Center, Lee Reiners. Lee, I'm going to start out with you because we just talked to Anthony. You've got your doubts about certain things around crypto, but how does this shake out? Ultimately, in 5 years, if we do this show again 5 years from tonight, what's our headline?
Well, Anthony and I have a stake dinner bet on the price of Bitcoin in 5 years. So I'm on record saying it'll be no more than $1,500. So, we'll see what happens here. As I've said repeatedly, Brian, for crypto and Bitcoin to have any value long term, it has to provide genuine economic utility. It has to be useful for something. And we just haven't seen it yet. And we're 13 years into this. By technology standards, Bitcoin and crypto is old. So if it hasn't happened yet, when will it happen? And Kate's right, it trades like a risk asset. Until recently, it's only existed in a zero interest rate environment. The moment the Fed started hiking, crypto plummeted. So it's going to be a while. I mean, the Fed's going to continue to hike, well into 2023. And so crypto prices will remain depressed for a while. And what it looks like on the other side of this rate tightening cycle is anyone's guess. But long term, I just don't see it having any value.
Now I want to play for you just a brief clip from Morgan Brennan, who is interviewing Jack Mallers, the CEO of Strike, and he comments on SBF and FTX.
The first thing I want to do is I do want to get your response to this FTX fallout, and also whether Strike in any form or fashion, or yourself even personally, have any kind of exposure to what we're seeing play out.
No. Strike, myself, and Bitcoin at large has nothing to do with SBF and FTX. I mean, it's nothing other than absolutely disgusting and malicious crime. In the same way that someone can go hijack a car down the street from my house, that has nothing to do with Bitcoin either. Unfortunately, it's just an extreme level of criminal activity, crime, and fraud.
Next, Andrew Sorkin interviews Changpeng Zhao, the CEO of Binance, the primary competitor of FTX. And actually, they were in the process, due diligence, and potentially were going to buy FTX. And he backed out of the deal after a conversation with Sam Bankman-Fried, and he realized that he was lying to everybody. He explains how it became clear to him he was lying to his investors, to his clients, and his employees. Take a listen.
Why don't you take us back, if you could, to when you first got the call from Sam and you first had a chance to look at the books, because I think a lot of people are still trying to understand exactly what happened here. How much of this was about commingling? How much of this was about terrible marking of the books? What did you see?
Yeah, I think I got a call from Sam 48 hours after I made the tweet, and then he wanted to talk. So at the beginning, I thought he would just wanted to, do a buyout on, do an OTC deal to buy out the FTT tokens we had. And then he wanted actually a buyout of the entire firm, of the entire FTX platform. And then, but then we got our team on, and it was pretty clear pretty soon that there's, there's misappropriation of user funds. The user funds are gone. At that point, it's clearly that he lied to his users, his investors, his VC investors, his employees. At that point, I thought I couldn't, like whatever data that's in the data room, we couldn't trust anymore. So it was quite hard for us to do that due diligence. So we didn't go very far.
Next, Andrew Sorkin and Becky Quick from CNBC Interview, Joe Lonsdale of 8VC, and his comments about potentially investing or not investing in FTX. Take a listen.
First of all, did FTX approach you for money ever?
Not directly, through lots of friends like, Joe, you have to get into this. This is amazing. I can hook you up. And, sorry, we're not doing that.
And is your view that that crypto is therefore dead? Is this that just FTX is dead? How do you separate the two?
I think Web3 is having a very tough year because a lot of the money in Web3 was tied to Ponzi schemes. And a lot of what Web3 was doing was not economic. It was not solving important processes that matter for the economy. And this is going to really hurt crypto. Crypto's not dead, but crypto's going to be a lot smaller than it was in terms of.
But so would you look at this and say Bitcoin it's at $16,000 right now? Do you think Bitcoin is a real technology that has a long-term, very viable, big future? Do you look at Ethereum similarly? How do you sort of differentiate the sort of value proposition of those types of coins, Solana and the like, versus the companies that have been either operating as exchanges or some of these other platforms?
I think the ability to decentralize who controls stores of value and for things not to all be controlled by big governments, especially when you have governments like China, Iran, Russia, and the world, it's a very important thing for humanity. And long term, we're going to have something like crypto as part of our global financial system. I think that the vast majority of the money going into it through places like FTX was chasing Ponzi schemes, and these things are just massively overvalued.
What did you see when people would approach you about saying, hey, I can get you in on this? What did you see that you were like, no way?
Well, the question we always ask, I've had so many smart young people come in like, oh, we're working on crypto, we're working on this stuff. Okay, what problem are you solving that matters for a process in the economy? How does this change healthcare, logistics? How is it actually going to change what people are doing with fintech and finance to add value as a process? And there's very little of that. It was much more about the excitement. It's much more about who else was in. And it's just this, it felt very much like 2000, like any other bubble in that sense.
And finally, just some quick sound bites from Anthony Scaramucci and Ken Griffin. This just is kind of a montage of their brief comments. Take a listen.
Far as we estimate, he has been worth as much as $25 billion, more recently valued by Bloomberg at $15 billion, but lost all of that in just about one day. Here's what Sam Bankman-Fried has told Bloomberg in the past about his company's profitability and growth.
We have, a few billion on our balance sheet right now. We are profitable. We're in a relatively strong place from a financial perspective.
I want to be doing something net positive, like with the making money part. I want to be a good actor there. We've raised a few $1 billion over the course of the last couple of years, and we're a profitable business. And with Voyager, I think there's $70 million there that we put in that I'm not sure we're ever seeing that $70 million again.
We've not used the majority of the cash that we have on our balance sheet. We want to be flexible. We want to be in a position where we are, looking forward at, what we can be doing, where we can be most helpful, and where we can grow the most. I'm excited about pathway forward. I'm really excited about our leadership.
This is a chart of Bitcoin. Now, I want to make the distinction that FTC filed for bankruptcy. Sam Bankman-Fried was at the center of that and appears to be a very bad actor. And but Bitcoin, Ethereum, and other cryptocurrencies, as well as the cryptocurrency space, it's affected by all of this. The credibility is affected. But the bankruptcy specifically and the diminished credibility specifically related to Sam Bankman-Fried and FTX. But in the process, what has been happening for the last year or so has been the decline of Bitcoin. This chart shows from the very top toward the right of the chart, you can see the top goes up to a little above 65,000 and drops at the far right corner down to, been down in the 16,000 range. I think it's recovered a little bit, but it's dropped 70, 75% plus. And it's, just at the very end, I think the FTX collapse added to that, and it certainly didn't help it. Next, I want to play an interview, a brief interview with Melissa Lee and Peter Bookveer. And this is I'm going to shift gears here and talk about housing prices, the decline that is happening in the housing market. He's an expert in it, and he speaks to it, the degree to which it exists, the degree to which it doesn't exist. And I think he puts it in perspective, pointing out that this is probably coming, and the degree, it's going to be it's not going to be a crash. It doesn't look like, and but there should be a decline, and it should happen in some of the housing markets, not necessarily all of them. But he puts that in perspective. So take a listen to this.
Bleak new analysis out from the Dallas Federal Reserve. Central bank officials warning a 20% drop in the housing market in terms of prices is in the cards. And if that happens, that could put a real dent and real personal consumption expenditure. So is a major housing correction unavoidable at this point? Let's ask Peter Bookveer, Chief Investment Officer with Bleak Lee Financial Group and a CNBC contributor. We use the term bleak on purpose since you're from Bleak Lee. Peter, you agree with this, that this is a possibility. Do you see that 15 to 20% number that they sort of threw out there as a scenario, a likely one?
Well, in certain markets, for sure, particularly the hot ones. And just to give perspective, over the last 2 years, home prices are up 40%. If you look at the time frame between 2013 and 2022, home prices went up more than the 1998 through the 2007 housing bubble. So it's an extraordinary rise, and now you have 7% mortgage rates, which are 15-year highs. So it has all the ingredients to see a notable fall in home prices. But again, specifically in the hottest markets like Phoenix or Miami. Now, on the other side, there's a dearth of inventory. 92% of people that have mortgages have a mortgage rate below 5%. Many of them are not going to be anxious to get out of those mortgages and move. So the one thing that can mitigate a sharp decline is that dearth of inventory of existing homes. However, new homes, those inventories are building rapidly.
So this is a chart of two indexes. They're superimposed on top of each other. The blue line is the housing market index, and you can see it goes up and down a lot. But on the far right of the chart, you can see recently how far down it has come. So there is, this tells us that there is a softening of the market, and you can go back over time and you can see the degree to which, when there is a sharp decline down, that it's bad for the housing market. But when something comes down this far, typically, this far, this fast, usually it means it's got further to go. That is superimposed upon a green line, which is the consumer sentiment index. And so in general, the consumer sentiment index tends to follow the housing index. And you can see where it has gone. I pointed it out with a black arrow to the right. And that tells me that the housing index and the housing market has further to decline. So I don't expect this to be a crash, a collapse like in 2008 and the years that followed. But as Peter Bookveer pointed out, it's probably could be up to 20% decline, and in some markets, particularly the hotter markets. So there are some areas that won't be affected very much, I would guess. But what's happening is that the increase in interest rates from the Fed has spilled over into the mortgage market. So it's making getting a mortgage much less, and there's certainly a good percentage of people get mortgages when they buy a home. So that has caused the prices to soften. And if they go up even further, which I'll show you something in a minute where that could easily happen, then again, that's got a repercussion over into the housing market. I thought I would put this in for just a piece of good news. Weekly gas price lane averages, you can see this chart. Have you noticed gas prices are starting to come down? Very nice, very welcome. Boy, they were going up fast, but they've turned around, and there's many drivers on that, behind that from the supply side. I don't know that the demand side has changed that much, but the supply side certainly is what caused a lot of that. This is an interesting chart. This is a chart showing the real, adjusted for inflation, the real movement of the stock market. This shows the, in green, the Dow Industrials. The blue line is the S&P 500, and the red line is the NASDAQ. And this shows all the way back to 2000 through 2022. So that's about 22 years of data, and it starts at the zero line. So look at what happens. Adjusted for inflation, this is the real change, increase or decrease of the S&P 500 and the Dow and the NASDAQ over that period of time. So it's interesting to me that when you look at the, I'm going to just pick on the blue line, the S&P 500, in that period of time, 22 years, the S&P has gained 46%, not per year, total. What that represents is a gain of 1.7% per year on average. And if you look on the blue line, it went negative and stayed negative for about 15 years. And now has gone positive, and now it's coming back down. So, but that entire 22-year period of time, say it another way, the S&P 500 exceeded the rate of inflation by 1.7% per year and was negative to inflation for 15 years. And the NASDAQ, 1% per year on average, real rate of growth. So when we see these numbers that the stock market has done this and this, even, at its height, the amount of real increase when adjusted for inflation is not as attractive as it might appear. There were, this came from Market Watch, and I've been listening to it in the press, is the comment from James Bullard, who's the president of the St. Louis Fed, which is one of the branches of the Federal Reserve Bank. And he says that the benchmark interest rate of the Fed, he expects to go to 5 to 7%. It's about 3 3/4 right now. That's a lot of increase. And you know how much damage has been done to the stock market and the bond market as a result of just getting to 3.75. Imagine going to 5 to 7. And he says at a minimum, it needs to go to 5 to 5 1/4, minimum, but probably 5 to 7%. And that is supplemented with Neil Kashkari, the president of the Minneapolis Fed, and he says that more rate hikes are needed. And he, like Bullard, are fairly aggressive on this issue and are saying we need to do more if they are going to really truly deal with inflation. I suspect inflation is going to be here for quite a while. It may not be at its peak for that time, but I think it will be elevated for a long time. And they're eventually, this will probably happen over years. They will eventually have to deal with this if they want to get the inflation rate down to 2 to 3%, and they really would like it at 2. If they are going to get it down that far, they've got to get interest rates high enough so that they will achieve that. But in the process, there will be a lot of damage to the economy, the stock market, and the bond market, in my opinion. Flow of funds report. Where's the money going? Where's it coming out of, and where is it going into? So the equity funds, conventional equity funds, had a net outflow of $13 billion last week. Conventional bond funds had an outflow of $10 billion last week. And money market funds had inflows of $4.6 billion. So you can still see, regardless of what's happening to the prices of stocks and bonds or bond funds, the money behind the scenes is moving, and most of it's moving out of bonds and equities, and just very quietly. So I think that's interesting. It tells a story that people or institutions are feeling the need to be more cautious. Thanksgiving is this week. I wanted to wish you a happy Thanksgiving and hope you get to spend time with your family and friends enjoying a nice meal together. And this young man says it very well. I'm thankful. I hope you are thankful. We have a lot to be thankful for. Yes, we have some challenges, we have some problems, things to be dealt with, but at the end of the day, we do live in America, and there is a lot to be thankful for. I will not be here next week. I'm going to take the next week off. I'll be traveling, and I'll be back the following week. Thanks for watching. If you have comments, leave them in the comment section below, and or questions, and I will attempt to answer them. Thank you.